Module 2. Checking Accounts. When deciding whether to open a checking account to help manage your money, it's important to ask a parent or trusted advisor for advice. Checking accounts aren't necessarily for everyone, but they can be very helpful to those who do need them. But before we jump into things, let's go over some key terms that you'll need to know. When you put money into your bank or financial account, it's called a deposit. When you take money out of your bank account, it's called a withdrawal. A debit card is a card issued by a bank that allows you to access your funds electronically, like at an ATM. You can also make payment using a debit card at many stores and restaurants. An account register is a form you can use to record withdrawals and deposits in your bank account. Your account balance is the amount of money in your bank account. When you don't do a good job keeping track of your account balance and spend more money than you have in your account, it's called an overdraft. We'll talk about some important things to know concerning overdrafts and fees in just a few minutes. And last of all, there's something called a checking account fee. Many accounts have monthly fees for using a checking account, usually ranging from $5 to $12. Most banks offer free checking for customers who meet certain requirements. Ask your bank if they offer free checking and if you qualify. So, why use a checking account? First of all, it's efficient. A checking account is the easiest way to store and manage your money. You can also access the money that you keep in your checking account from other banks, ATMs, and even online. When you open a checking account, the bank will issue you checks and a debit card, which you can use to pay bills or purchase items in most stores and other locations. This way, money is taken directly from your account. It helps you keep track of your money. It's not a good idea to just keep cash in your pocket. It's hard to keep track of, and you might lose it. Using banking services, you can check your account activity safely and even from the comfort of your own home via online banking. Most banks allow you to keep track of your money through free online banking alerts. They will also automatically email you or send you a text message on your phone when you make a deposit. You can customize your alerts to notify you of daily balances, direct deposits, and more. In addition to helping you manage your money, a checking account gives you proof of payment showing the amount you paid, to whom, and when. If you log into your bank's online banking site, you can also view and print images of the checks you have written. Having a checking account also saves you money. Accounts cost anywhere from $5 to $12 per month. However, some banks offer ways to avoid the monthly fee for keeping a minimum monthly balance or having direct deposit, for example. Now, let's take a moment to talk about debit cards. A debit card links you with your checking account. It allows you to make purchases at any establishment that takes debit or credit cards, whether it's a store, restaurant, or website. Debit cards are different from credit cards in that with a debit card, you spend actual money from your bank account. Using a debit card is a lot like writing an electronic check. With this in mind, it's important to be careful of how you use your debit card. Your debit card will look something like this. Let's take a look at the most important things on your card. In the middle of your card, you will find your card's account number. This is not the same as your checking account number for security reasons. Your card's expiration date can be found directly below your debit card number. When your card reaches the expiration date, your bank will automatically mail you a new card and you should destroy the old one. The name of the account holder lies below and to the left of the expiration date. Many banks offer a photo security feature on their debit cards, which puts your picture on the front of it to help prevent others from fraudulently using your debit card. So why should someone use a debit card? First of all, they're convenient. You can use a debit card instead of carrying around a checkbook or large amounts of cash. As we've mentioned before, your debit card links directly to your account for use in stores, restaurants, and other places. You can track your debit card purchases 24/7 through online banking services. And they're safe. Debit cards also require a personal identification number, or PIN, for use, which ensures that only you can use it and your money stays safe as long as you don't share your PIN with anyone else. Knowing what a check looks like and how to fill one out is really important when receiving or making payments. While people pay for most things with a debit or credit card these days, people are usually paid by their employer with a check, or they use checks to pay others large sums of money, such as rent. While checks can often have different designs, they all have the same important features. For example, all checks have your name and address, and sometimes your phone number. The check number. This helps you and your bank identify each check you write. Note that this can be found at the top and bottom of your check. a line for the date you write the check, a pay to or payee line. This shows the name of the person or company you're paying money to. The dollar box. This shows in numbers how much money you will be paying with the check. A line where you write out the amount of your check in words instead of numbers. This is the official amount of the check. If this box is different from the dollar box where you wrote the amount in numbers, the bank will use this amount in words to determine the check's value. A memo line. This is where you can write a note about what the check is for. Your bank won't use this information, but it might help the person you're paying know what the check is for, and if you look at a copy of the check later, it can help you remember why you wrote it. A signature line. To make your check official, you must sign it. Your bank's name and or logo. A routing number. This is your bank's electronic address. And your checking account number. An automatic teller machine, or ATM, allows you to access your checking or savings account and take cash directly out of your account. You can also check your account balance. Most ATMs charge a service fee, which varies from one ATM to another. However, ATMs owned by the bank where you open your checking account will not charge you to take money out of your accounts. Having a checking account and using checks and debit cards is a big responsibility. Keep track of your balance and what you've spent. Once you open your checking account, always be aware of your balance and don't forget to consider checks you've written that haven't been processed by the bank and aren't showing up in your accounts yet. Keep a record of the checks that you've written in your check register. That's the best way to know the total amount of money you've spent. Receipts might contain account information, so keeping them helps protect your account. If you discard your receipts, do so in a secure manner. Using a paper shredder is a smart option. The best way to know how much money you really have available to you is to maintain an accurate record of what you deposit and what you withdraw. In the same way that it's easy to use a debit card for purchasing, it's also easy to lose track of spending. To keep from spending more money than you have, you should monitor your account balance by keeping track of your purchases. You can also use online banking to monitor account activity. Link your checking account to a savings account with an overdraft protection program, which transfers money from your savings to your checking account. But remember that even when you do this, many banks will still charge you a fee for covering you when you overdraw your account. You are responsible for the transactions that you make, and you must ensure that you have the funds in your checking account to cover all expenses. Before we go, let's take a moment to talk about how to use your check register. Your check register will look a little something like this. Remember that check we wrote to ABC Clothing a couple of minutes ago? Let's record it. As you begin, put the current balance of your checking account here. Now, write the date of the check in this column, and write the check number in this column. In the next column, you can write a short description of each transaction. In this case, we'll write the name of the store that the check was written to. Use these two columns to record the amount of the transaction. In this case, credit and debit means something a little different. Credit means money added to your account. Debit means money taken from your account. Since this is a check, it's money you've paid from your account, so we'll put the amount of the check, $123.45, in the debit column. Now subtract the amount of the check from your starting balance to get your new balance of $376.55. Another quick example. Let's say the next day you got your paycheck. Write the date here and something like paycheck here. Since this is money being added to your account, put the amount under the credit column. Then add the amount to the balance in the line above, not your starting balance, but the balance after the check you wrote to ABC Clothing, to get your new balance, $776.55. And you can keep adding transactions like that. Once a month, your bank issues you a bank statement, which gives you a record of your account balance as well as all of your account activity. Bank statements allow you to keep better track of your finances, so you should review your latest bank statement each month. So, what if you don't keep track of your spending and account balance? If you spend more money than you have in your account can become overdrawn, and you will be charged expensive overdraft fees as a consequence. Your $2 latte could end up costing you $37. How? Let's say you use your debit card to buy that latte, but you forgot that your checking account has only $1 in it. Since you're $1 short, your bank has to spot you the money, either from your linked savings account that we mentioned a few moments ago, or from its own funds. For doing you the favor, they're going to charge you a fee called an overdraft fee, which at many banks is $35. Hopefully that's the best latte you've ever had. But you can avoid these fees as long as you're responsible. To avoid becoming overdrawn on your account, you will need to keep track of all withdrawals and deposits. You can do this by using your online banking service and your account register. As you do so, you will see that having a checking account can have tremendous benefits.